Everyone says the market is going down. It seems whether they're a billionaire like Ray Dalio, or a teenager, or some famous YouTuber like Graham Stevens. They're making videos by the megaton and blasting them all over YouTube and the rest of cyberspace to tell you how badly the market is going down. I wonder if this is influencing the momentary sell-off. I mean, speaking of Ray Dalio, he hasn't stopped market bashing in 50 years. I think these billionaires are lying to us, so we'll get out and they can pick up our shares. I'm really getting tired of hearing the market as if it's one stock. As if every stock, whether it's a super overinflated bubble with no profit or a 200-year-old company with strong earnings every year since their inception 200 years ago, is going down. Why? Because Chairman Powell is talking. Chairman Powell can say anything he wants. He can raise rates as high as he wants. I'm still going to get a hamburger. I may not use the latest Apple wearable, but I'm getting a hamburger. Let me tell you something. The market of publicly traded companies is going up. Specifically, the stocks that are worth more now than they're currently selling for. Take a minute if you want to digest that. It seems nobody breaks apart the stock market into various stocks anymore, some of which are worth more than others, some of which are worth a lot more than they're selling for. This makes them a good buy. That's how that works. And I'm not talking about Microsoft. I'm talking about Gap. People will continue to find solace in Gap and athletic clothing, in the McDonald's of brick-and-mortar clothing itself, Old Navy. To buy those thousands of stores all over the world employing 90,000 people for a couple of $1 billion, comparatively to what so many stocks you've never heard of that make no money are going for 50 to 100 billion by comparison. I'd buy any profitable global economic phenomenon for a couple of billion. No matter how broke people are, they will continue to visit Wynn Las Vegas and Encore resorts for a chance to make it big. And for those that fail to make it big, entertainment like no other and fine dining awaits. Even with nothing in their wallets, Joe Public is still going to throw up his Hanes underwear and Sally Public strap on her comfortable cotton stretch sports bra. Not just because underwear are essential to the modern human's image, but because they're so goddamn affordable. Party City will continue to put a smile on my daughter's face and the face of kids and parents nationwide. And you can now buy in at a cost of $250,000 per store, regardless of Jerome Powell's aggressively boring speeches. People are going to continue to plug in their Roku and sign on to Netflix for some more interesting entertainment. If not to drown out their sorrows over the recession by losing themselves in another episode of The Chilling Adventures of Sabrina. And parents will continue to plop their children in front of Disney shows and in front of Disney toys to occupy them while they work hard to overcome the inflationary pandemic. Robinhood will continue to get new savvy investors looking to quickly take advantage of this corporate economic downturn, as well as the crypto winter, with quick, easy trading that no other platform provides. And Coinbase will continue to process transactions even though Kraken is better. Wayfair, who had the balls to knock on Amazon's door, will continue to offer bargain deals on the latest area rug, bathroom storage cabinet, or whatever other technological trinket flies across the needy consumer's mindset, as will Amazon. And you can get into Wayfair now at a $5 billion market cap. A little more percentage growth potential upside than you do at Amazon at something like $1.5 trillion. Wayfair could much easier become a $20 billion company than Amazon a $6 trillion company. Much, much, much easier. 20 billion is a market cap they sometimes just give out to companies who show nothing. No matter how bad things get, Fiverr will only be needed more to pimp out its massive international network of super bargain freelancers to a world of other freelancers and independent entrepreneurs killing themselves to succeed. Krispy Kreme and Denny's will continue to provide filthy fills for a legion of truck drivers, families, wayward teens, the elderly, the middle-aged, and the rest of the average Joe and Sally working man getting their sugar rush before a long, hard day at the office or on the job site. Folks who don't have $40 to spend at Starbucks, which is a sell in my opinion. Hain Celestial Group will continue to bring premium consumer-grade tea to the international upper, middle, and lower class, as well as their bath, beauty, and top alt-brand hygiene products, which continuously run empty and continuously need to be filled. Regardless of how deep and cutting the recession becomes, no matter how many jobs Powell absorbs into his gut, Best Buy will continue to be the solo brick-and-mortar monopoly on electronics in a super age of electronics. They will additionally continue to be a beacon of computer and mobile device sales in a world where no human lacks or can afford to lack one even if they're homeless. And let's not forget appliances, which no home in today's world lacks. Terra and Orbital will continue to map the moon and gain contract upon contract for satellite orbits and other related services. Facebook, the only large company I have any shares in, will continue to harvest me and you, its product. American Airlines will continue to fly people through the friendly skies from state to state and coast to coast at ever-increasing speeds and higher and less turbulent altitudes. No matter how bad it gets, families will still take their children once in a while to Red Robin for a Whiskey River barbecue burger with bottomless fries, towering onion rings, and a round of Oreo cookie magic milkshakes for all. Most people never look at the value of a company commensurate with the services it performs. I suppose only the elite investors of the world are thinking like that, but you'll never catch them talking like that. I'm not even sure they are being deceptive when I see Warren Buffett load into Apple or Ray Dalio into Starbucks. I wonder if they really believe in those meme stocks. I wonder if they can see the forest through the trees of their balance sheet analytics. They've all seemed to have forgotten growth potential and economic moat, especially in a recession. Although the command economy principles could challenge this concept. It is not a calamity, Great Depression-proof company. People were in line for bread during the Great Depression. You can't have it both ways. If they are smart enough to see it, as private equity has increasingly become, they are not going to tell you. You could severely jeopardize a market cap like Red Robin by obtaining shares, while the entire 500-location restaurant chain is selling for $100 million, which probably does not even cover the cost of the bathroom in their restaurants. Red Robin, not Cheesecake Factory, is going for 11 times more with half the locations. Menu and pricing can change. Distribution is king. Wayfair, not Costco. El Pollo Loco street tacos and Krispy Kreme sidewalk donuts, not Olive Garden this time. Follow me and you can learn from the guy with a portfolio chart that has grown on a semi-vertical trajectory since inception.